What if I told you that every time you scan a QR code to pay your local vendor, you're not just making their life easier, you're building them a credit score that could get them a loan in 60 seconds. This is already happening, and it's about to change everything. Picture this. A street vendor in Mumbai needs 500 rupees for just one day to buy extra stock for a big order. Right now, his only option? A local moneylender charging 36% annual interest, sometimes more. But what if that same vendor could get that 500 rupee loan in under a minute at competitive rates without any paperwork or collateral? The secret? Every UPI payment he receives is building a digital trail that proves he's creditworthy. This isn't some distant dream. The infrastructure is already here, and when it goes live at scale, it'll be the biggest financial revolution India has ever seen. The invisible economy. Let's talk about the elephant in the room. India's informal economy. Millions of vendors, hawkers, and small entrepreneurs handle cash flows of 10,000 to 50,000 rupees every single week. They're running real businesses with real income. But here's the problem. Banks can't see them. Traditional banks find small loans uneconomical. The cost of underwriting a 500 rupee loan is almost the same as processing a 50,000 rupee loan, so they simply don't bother. The result? These entrepreneurs are forced to borrow from informal lenders at 2 to 3% per month. That's nearly 40% per year. They're not poor in activity, they're invisible in data. And that's exactly what UPI is about to change. In October 2024 alone, UPI processed over 16 billion transactions. Each one is a data point, showing who paid, how much, and how often. A recent study found that merchants who use UPI regularly can access credit at significantly lower rates because lenders can now verify their business activity in real time. Your digital payments are becoming your credit history, and that's UPI's true superpower. What the world tried before. Before we look at where India is headed, let's see what others tried. Bangladesh created the Grameen Bank model in 1983, small loans to poor women using group lending and social pressure. Repayment rates were above 95%, but scaling it was brutally hard. It required weekly meetings, intensive monitoring, and massive human resources. India tried self-help groups, connecting small savings groups to banks. Millions of women benefited, but the loans were typically 10,000 rupees for months, not 500 rupees for a day. It didn't fit urban or ultra short-term business needs. Kenya revolutionized mobile money with M-Pesa. But when digital loans came, defaults exploded. Why? Because without accurate income data, lenders were shooting in the dark. Peer-to-peer platforms like Kiva connected global lenders to borrowers, but struggled with scale and high per-loan costs. Every model taught us one lesson. Universal microcredit fails without accurate, low-cost, real-time data. India's secret weapon. Here's what makes India different. We've built something no other country has. A complete digital public infrastructure. Aadhaar gives verified identity. UPI provides instant payments and transaction data. Account aggregators enable consent-based financial data sharing. And OCEN, the Open Credit Enablement Network, connects lenders and platforms through APIs. Put them together and you get an automated, data-driven lending machine. Here's how it works in practice. A tea seller receives UPI payments all day. His daily inflow is 2,500 rupees. Through the account aggregator framework, he gives the lender permission to view this data. OCEN allows the lender to assess, approve, and disburse a 500 rupee loan instantly. Repayment happens automatically the next day as UPI inflows resume. No paperwork, no branch visits, no collateral. Just verified data and instant credit. The credit engine of the future. This isn't theory. The architecture is being built right now. AI models can assess real-time signals, number of daily transactions, average ticket size, repeat customer patterns, refund rates. These create a dynamic credit score that updates daily, unlike static CIBIL scores that only change monthly. The product could look like this. Loan amounts from 100 rupees to 5,000 rupees. Duration of 1 to 14 days. Interest rates of 0.05% to 0.5% per day. Auto deduction through UPI inflows. Zero collateral required. The more consistent your digital payments, the cheaper your next loan becomes. It creates a virtuous cycle. Digital payments generate better data, which enables better credit terms, which drives business growth, which creates more digital payments. The risks we must avoid. But let's be honest about the dangers. In Latin America, borrowers took multiple small loans simultaneously and spiraled into crushing debt. In Kenya and Nigeria, unregulated lenders charged hidden fees and misused personal data. Some Southeast Asian apps even publicly shamed defaulters by spamming their phone contacts. India needs to build safeguards from day one. Strict caps on daily interest rates, complete transparency on loan terms, strong data consent protections under the account aggregator framework, and limits on simultaneous loans. If we get the regulations right, India could lead the world in ethical digital lending. But if we mess this up, we could trap millions in debt cycles instead of liberating them. The bigger picture. When microloans become instant and data-driven, the ripple effects will be massive. For vendors, predictable cash flow and freedom from exploitative moneylenders. For women entrepreneurs, access to credit without needing a male guarantor or property collateral. For banks, low-risk, high-volume products backed by verified transaction data. For the economy, greater formalization, better tax collection, and higher GDP velocity. This formalizes the invisible economy. For the first time, the street corner vendor becomes part of the nation's formal credit ecosystem. The real purpose. When UPI launched, everyone talked about convenience. Splitting bills, scanning QR codes, instant transfers. But the deeper vision was always about inclusion. Every 10 rupees digital payment is a footprint. That footprint tells a story. Here's my business, here's my income, here's my reliability. India could become the first country where a rickshaw driver gets a 500 rupees loan at 10 a.m. and repays it at 6 p.m. through the same app he uses for payments. That's when UPI's success won't just be measured in billions of transactions, but in millions of lives empowered. So next time you pay your local vendor via UPI, remember this: you're not just making a payment, you're helping them build a financial identity. You're helping someone step into the formal credit world where 500 rupees borrowed today could mean 5,000 rupees in revenue tomorrow. This is where data becomes credit, where inclusion becomes access, and where technology becomes liberation. If you found this perspective eye-opening, hit that like button and subscribe to Periscope. We decode how policy, technology, and finance are quietly rewriting the Indian economy. Drop a comment. Would you trust an instant UPI-based microloan system? What safeguards do you think are essential? This is Periscope, seeing beyond the obvious.